Hey everybody, it's Pete. Welcome to a new episode of today's Best Stock Picks. It is Monday morning, September 14th, 2020. Interesting market today. Right on cue, the market got beat up last week, just barely took out some support levels, and news over the weekend has the market rallying this morning. Some of it's about AstraZeneca clinical trials expanding for the pandemic. But it really doesn't matter. The market is a longer-term bull market off the March and lows, which a lot of people were panicking last week where the selling was getting vicious. But here's the thing, and I didn't know this when I first started trading. I was just trading the most recent price action. In bullish environments, when markets break new lows, they don't stay there until you have a confirmed change of trend. So what normally happens is we have these lines in the sand where we just kind of barely peek through there, and it looks like that is now the market's falling out of bed, and it might eventually do that. But right now we're still in a confirmed uptrend since March. So we're going to take a look at some of the price action in the SPY, how to make a picture that will tell you the price action has changed, and then ultimately how to trade both sides of the market. I look just straight up, especially if you're an active day trader or a swing trader right now, I'm not going to lie, it is a little bit frustrating where we're kind of flip-flopping back and forth. But you know what? And I say this to everybody in the boot camp. These are the times where if the market is not ridiculously clear, these are the times to pull back on your share size, be kind of like a sniper in there where you're just really being super picky about what trades you take because the tape is not perfect. Here's where the problem comes in, though. You're focusing now on an opportunity where the market's a little tougher, where you should really be going back to July and August and asking yourself, why didn't I make more when it was really, really obvious? That's the big question that needs to be asked for most traders. It's not managing the downside. It's not being disciplined, but it's not sloppy. It's, do you have a process for making the most money when it's obvious? So when it gets tight and choppy like this, it's not bothering you as much. Again, in the boot camp, which by the way, I hope you're in the boot camp or joining the boot camp. When the market is choppy like this, when it's not obvious, you have no problem with small profits and small losses because it's just an expense to run your business because you made really good money during July and August when we were basically going vertical for 9-10 weeks. And again, I never want to use the term easy, but it was easy obvious. It was clearly obvious on the upside. So I'm starting out Monday morning, forcing you to think, what could you have done differently when the market was obvious, or even you get these pockets of opportunity where it's obvious that you could have made more? Did you need to size up more? Did you need to read the market internals better? Could you held winning trades longer, both as a day trader or a swing trade, so that when you get these choppy type of markets, you're not feeling like you have to trade, like you have to do something because you made good money when it was obvious. And now this is just kind of those days when you go to work and you run the business and it doesn't seem like anything interesting happens and you're not throwing bad money at bad situations. And you're in a good place right now, just sitting back, waiting for the market to unfold and give us some clues. So what do those clues look like right now? Really, from the most pure perspective, is the daily charts. Let's not go out to multiple time frames and do all those things. At the very least, if you're a bull right now, you want to see the daily charts do what I call, which is an old school term, you want to see it go well bid. So until the daily charts go well bid, which is higher highs, higher lows, and that second candlestick closing near the highs as well and above the previous day's close, until that happens, you're still kind of in taking what's available mode because the market itself is giving you feedback that it's not ready to make another run. But as soon as that happens, then it starts to become fractal. You get well bid on the daily charts, well bid on the weekly charts, well bid on the monthly charts, and then you have the kind of price action that we had in the market during July and August. So I'm giving you the model of what to look for before it even happens. So we're going to head over to the charts. We're going to take a look at some stocks. We have roughly a dozen that we're going to take a look at today. But we're going to start out with the SPY. So the SPY obviously is where I'm spending most of my time. And what's interesting here is you can see that they bounce off the lows. But this is what's important. When the market breaks a downtrend, and this is classic drawing trend lines, classic technical analysis. When it breaks the trend line, you have to put a line there and say, okay, if and when that breaks, that's establishing a new trend in the other direction. So really, if you want to get technical, this is the window that we're looking at right now. The market, until it clears this new high or this trend line break, is kind of stuck in a box here. Now, this move was a little bit exaggerated these 2 days, but heck, that's the market we have right now. So as far as a market is concerned, bigger picture, this is where we are. But remember what I just told you about what we're looking for now to feel a little bit more confident in our short-term trades is you want to see this. You want to see well bid and closing on the highs. Well bid, closing on the highs. And you can see we're not getting that. This was a positive day from the open and a positive day from the previous close, but it was inside the previous day and it wasn't well bid. So this really didn't mean anything. And then the next day it followed with well offered and well offered again. So today's the futures are up. Where are they? Right here. The futures are up big right now. So they're opening positive or set to open positive. Now what we want to see is follow through, well bid, and then we can start to look to be a little more aggressive. Now if you're day trading, obviously you're looking for those day trading parameters to unfold and give you that cleaner picture for swing trades. But I just outlined what we're looking for this entire week. So have that mental model in place. The stock that we're looking at the top of our list, which we called out last week, right over here, is Workhorse. You can see it's opening kind of neutral right now, but it's very strong relative to the market. And now what's kind of exciting is it broke through these highs and now has paused for the better part of 3 days. So we're looking for a new swing trade long in Workhorse right now. AstraZeneca, obviously those trials are expanding now and the stock is going to be in the news. What I like about it now is that despite the fact that it doesn't have any obvious order flow, it really hasn't done anything since here when it had that really big news in the summertime. We traded into a consolidation on Friday, and now I'm looking forward to expand from that consolidation and give us a really nice trend day. So today's going to be either a large green or a large red candlestick. But for an active trader, if you have your tape reading hat on, you'll know exactly which side of the market to trade. But news and a consolidation last Friday leading to a good day. One thing that I want to point out here is CODX. Now, CODX has been called out in the bootcamp game plan sessions in the morning. I said, not yet, not yet. But now we got a little bit more proof, I guess is the way to word it. You can see that we have these giant green candles on positive days. So the smart money is starting to step into this stock and would be an aggressive long because obviously we're still heading down on the daily charts, but the market is giving us feedback to say, get this stock on your radar. Something is changing here. Same thing with DPHC, which was really strong last week. This was also called out. Now, the problem with trading these stocks is it starts out at $10 and then explodes, and it becomes a part of everybody's watch list now, or at least their scans. How do you measure a stock that really hasn't moved that much? This is really what the stock was doing. It was having maybe 20-cent moves, 10-cent moves, and it goes from having 10-cent moves to $3.50 moves. How do you measure a stock like that? Well, you don't, really. You don't. There is no target for a stock that really doesn't have a recent price history. You're really using trailing stop losses and your momentum indicators here. So in this case here, we're actively looking to trade it. We just don't have targets on it right now. As long as it maintains well bid, like I just described before, we can continue to look to be a buyer of this stock. Next, we have a stock that just came off of all-time highs that pulled back. What I don't like about the stock is 1, 2, 3, 4, 5, 6, 7, 8. 7 out of the last 8 days, the stock is closed below the open, but it did just pull back from all-time highs. So as long as the stock today is above Friday's low, I'm looking for 2 days to the upside. It's a very short, compact move. It's not a longer term play. I'm not looking to swing trade it. It's just I'm looking for this lower pullback, pulling back to support, looking for it to go well bid, and then looking to get back in there. Two unsexy stocks that have been trading well, DOW and FedEx, both of them peeking their head up, and you can see FedEx is actually even stronger again today. I love both of these long, both of them initiating new swing trades. Nike is another one that we've actually been on as a swing trade since over here, actually, and getting some nice follow through, and you can see it's opening up a little bit higher again today. The tough part about Nike here, and I'm seeing some newer traders in the bootcamp having this problem, is the stock has now already gone up 4 days in a row. So you can make an argument here that 1, 2, 3, 4 days of positive trading, another higher opening today, which is taking it into all-time highs. Today is not the day to initiate a new swing trade. You're really looking for this to happen next, or maybe even this. And you can see it actually held up very well with the way the market got hammered. You can see the market actually kind of fluttered around here, and Nike actually rallied again. So it's got good relative strength to the market, but not initiating a new swing trade long today. I would definitely be looking to day trade if it meets all the criteria. But ideally, this is what I'd like to see, even 3 days of consolidating for the next swing trade. Zillow actually comes up on the list. You can see a bunch of melted candlesticks here, which shows indecision, but it did not sell off with the market other than those 2 days. And now I am actually looking forward to retest 92. So maybe 1 or 2 days up there. Two stocks that we've been really hawking lately, CRM and Target. I like both of them long. Target actually is traded into what we call an inside day. If you are looking for the easiest swing trade entry on the planet, you have it right there. Market down 3 hours before the market opens. We're calling it out. And last but not least, we're going to take a look at Penn. Penn just pulled back a little bit of profit taking off of all-time highs, is benefiting from the get out of the house change that seems to be going on in the rotation in the stock market. I would actually love to see a lower opening in Penn to look for a spot to bid. Higher opening tends to get up there, pull back, and then you kind of get stuck in a day trading position. So ideally in Penn, I'd like to see it here, push lower, just barely take out yesterday's lows, and then look to initiate a new swing trade, because that also just filled the gap as well. So we got some opportunity out there today. I think because the markets are opening a little bit higher today, pre-market anyway, futures are opening pre-market, I'm a little bit more on the conviction level to being in there and bidding today, where last week, Thursday and Friday especially, I was kind of really in preservation mode because it wasn't that obvious, but we can't ignore that little bit longer term picture. So today we have a really clean line in the sand. We're opening higher. Do we hold that higher opening? If we do, what we call in our community the opening range breakout, if we do, we can get in there with a little bit more confidence. I am, however, because not many of these stocks are well bid on the daily charts, I'm not looking to trade size yet still, again, because the picture's not clear. It's getting a little clearer, especially if we hold today's price action. But again, trade management perspective, I'm not looking to trade size unless the stock is well bid on the daily charts. So we're getting follow through on those particular stocks. So keep an eye on Target today. Target is setting up for a really big day and hopefully a big week, because it's been kind of setting up since earnings. It's been kind of a dud, quite honestly. But the last 2 days it consolidated, and I think today's going to be the day. So if you have any questions, click down and leave a comment. And if you want to join me in the boot camp and trade in real time, click down and learn about that too. I'd love to see you on the other side. Have a great day, everybody.